Welcome to Java and thank you kindly for joining. It's November 4th, 2025. It is also Tuesday. So today, I'd like to talk a little bit about the shape of the economy. Not round or circle, but definitely K-shaped, nothing flat about this. We are in day 35 of the United States government shutdown. And yesterday, Palantir released their earnings. They took a plunge. I want to talk a little bit about what is going on behind that corporation, as well as what is happening with that. Now, that did have a major effect on the market as far as what's going on. So let's get started with what's going on in the markets. We've got the fear greed meter is in fear territory, so it's pulled back quite a bit. At 31, we're watching the retailers now beginning to sell off. Now, as of this morning, markets still look a bit green, but they're extremely weak. And we've got the VIX, the volatility index here, if you see, up to 13.92%. So this is a significant change from what we've seen the past couple of days. This is even hitting gold a little bit soft, but it's back above the $4,000 level. So I expect gold to increase again. Let's take a look at the factors. First off, futures are also saying that there's more weakness slated for today. So very weak opening. We're going to be taking a look at the 10-year yield, always taking an eye on that. That it is rising, it's showing a shift back from the money is flowing back into safe haven of the bonds. And this is why I believe gold will pick up a little bit from here. We've got crude oil a little bit weaker, and we've got the one carrier on the opposite side of these stocks is the relative strength of the dollar. So this is gaining strength as the dollar becomes, this is only relatively stronger. This will pressure the stock markets also. So we've got pressure coming from there. Cryptocurrencies also down in a relatively significant manner, and not enough to panic about. At 104,000 just above, there's still some space below here. Doesn't have to go down further, but there's still some space below in Bitcoin, which will also affect all of the others because this is a larger environment picture for cryptocurrencies. So keep that in mind. So our daily driver for this market is doubt. And this has to do a lot with what's going forward. So let's talk a little bit about kind of the background, if you will. Carney, who's the new Prime Minister of Canada, for those that don't know, they're going to unveil a debt fueled budget to revamp their economy. So, starting off the budget, starting off this whole new economy from a debt perspective, starting it off with loans. And what would you expect from a previous central banker guy? He's got a pretty good track record of crushing things and seems to continue. So, on moving over to banks, BankThink. This is a quote from them saying that it's time to rewrite the unwritten rules of community bank capital. Now, typically, community banks do hold reserves despite regulations. They're a little more highly regulated, and if you will, they've got a little bit higher bar that they've got to meet. So, with this, they're looking at re-scripting this because we know that all of the smaller banks have to shift with what is coming. There's going to be massive mergers, acquisitions, as well as just outright closures of the smaller banks. I believe this is going to melt down to 3 or 4 major banks once they shift completely to the CBDCs. This is going to be over the period of probably a couple of years, not anything immediate, but we will start seeing some. We've already got some going on. Now, they are also saying the canary in the private credit coal mine just dropped dead. So they're kind of taking on the view also of private credit has kind of obscured, if you will, and this is part of what has moved a lot of this forward. So when you look at the private credit, which is what the Federal Reserve, by the way, is looking at rolling off their mortgage-backed securities too. So what is going on? The Fed is now rolling off their balance sheet. That just means they're selling off the bad portions, which is the mortgage-backed securities, which are in trouble, to private equity so that no one has to really account for them, if you will. And these private banks, also private equity, can also benefit from these moves if this shift happens in a negative fashion, which we all believe they will. The probabilities for this are just way too high now. We've got UBS chair now warning of a looming systemic risk because of these private credit ratings on some of these other firms. Now, he's talking about Fitch, Moody's, and the likes, but they've already started in. And this is a large reason why they are, is because the regulatory stance that is coming out, they're seeing higher risk and therefore downgrading even more. Hopefully that caught in. That was a massive amount of information right there. So thank you for letting me put that out. We've got the calendar for this morning. We're going to hear from Michelle Bowman. Actually, already have early this morning, but she's already talking a lot about the rates, as well as kind of going forward that December is not a guaranteed rate cut, kind of carrying the narrative. We're not going to get these reports because of the shutdown. Really what the market is looking forward to is the ADP numbers tomorrow morning prior to the market open. So get your positions ready for something like that. We know that employment is increasing. The only difference, what we're listening for, is whether they seem to feel like the numbers are a shock or not. And they'll just say it's expected that millions of bajillions of humans no longer have a way to support their families the following day. So, market bits and info. We're looking at another statement coming out regarding the bankers. So I'm going to do a little bit more of a background with this. Card and check schemes, which are being used less and less. Less people still use personal checks, but they want them eliminated because this is a little bit too much control for the banks. They don't like it. So they're saying the schemes dominate bankers' fraud woes. So if it's fraud, it's an absolute reason for them to look at annihilating it. And once they can get rid of this clean off the top of the table, so to speak, it gives room for them to put in the surveillance, of course, in order to combat this fraud. So we're going to need more of this central bank digital currency, which is the stable coins, so that they can build in these anti-fraud measures. What that is, in short, is this surveillance. You're going to have to report, and they will know all of your transactions. So aside from that, in the market, we've got a couple of the larger ones, Goldman Sachs and Morgan Stanley, are predicting up to 20% stock market drop within 2 years. So this could be the significant correction. I keep getting asked the timeline. My timeline estimate is much shorter than the next 2 years, but you've got it from two of the big ones within the next 2 years. I also think the correction could be significantly more than 20%, but 20% is the baseline. In other words, if we've got a correction that happens, it's only 10% or, an 8%, which is still significant. Don't get me wrong. It's not going to be enough to clear the table or allow enough room, if you will, that the market can continue in its relative boom up and to the right. So we see that 20% correction is going to give it a lot more room. As of now, we've got continued inflation. The dollar this morning getting stronger is the opposite side of this. So inflation in the debasement trade, the dollar getting stronger this morning is to wash that out. So washing out both sides is what they do in order to make money. We're watching this slight swing today, weaker, but we've got continued inflation that is going to happen. So once these corrections happen, those are the opportunities to kind of fill back in and why you want to keep dry powder. So we've got, this was an interesting one. China's budget artificial intelligence bot, meaning their cheap version, which is what they're known for, smashing ChatGPT in a crypto trading face-off. So they're just trying to prove themselves in multiple sectors, but the fact that they can operate at much, much lower rate, this is going to filter through to question the valuations of ChatGPT, which is a huge cyclical figure in all of this cash that's been handed around to all of their buddies in this round system. So if ChatGPT loses this valuation because China can put out the same thing or better at much less cost, it's going to seriously call into question the values. HSBC CEO, large bank again, warning of a mismatch between artificial spending and profits. This is one key example, so I just wanted to have that for you so you understand, because artificial intelligence, everyone's talking about the benefits forward, and I agree, but the benefits forward are years down the road. They're not right now. There have been a few studies and reports that have come out, small businesses in particular, not profiting from the cost to value. So they're going to have to prove themselves, and there's more. Get into that in a moment. We are going to be in a shift toward this digital currency. Like it or not, I know a lot of people don't like cryptocurrencies. Cryptocurrencies are not the same as saying a digital currency. Digital currency encompasses all of it. Cryptocurrencies you can decentralize with and trade peer to peer. Stable coins are going to be centralized and tracked and surveilled through the bank. So stable coins and CBDCs are not the ones we want, but they're definitely coming. Cryptocurrencies are the ones you want to look at. They're getting soft on their prices right now. They drop a little bit further. It could be a good opportunity to get into that asset class if you're so inclined. I do believe they've got a little bit lower, and when people panic, that's when you want to uh, acquire. We've got stable coins can be issued, and Russia, their central bank says mid calls for rules. So I put this in here because this is definitely going to be global. A lot of people are still under the impression that cryptocurrencies and stablecoins are only for United States, Euro, China, Asia. This is definitely going to be a global thing, and they're all going to shift to stablecoins and eventually one or two and down to one, so it can be globally traded. We've got Hong Kong also to advance CDBC plans as the Hong Kong charts regulatory future. So they're definitely already in. This is going to be a massive market as well into the east. They're going to be a pivot bridge for currency fiat to currency digital stablecoins. We've got China cutting data center energy bills for tech giants. Now, got a major problem with this because, as I was speaking about yesterday, tech giants all getting a break on their energy, and what is happening is they're raising the costs on the middle class. So when they raise the energy rates for all of the people living in the area, they subsidize those that are a lower income. So this is just one more way they're squeezing out the middle class with these energy bills and giving breaks to these tech giants worth multi-billions of dollars. They're trading in this cyclical fashion to each other to keep their businesses going. Why do they need breaks on their energy bills? It's just a question to put forward, not to mention that they have the ability to borrow forward, which is what they're beginning to do. Now, Palantir, one of the largest ones, they just came out with their earnings. They saw profits drop and their earnings report was quite good, but they were priced for perfection. Nvidia, very similar. So we're watching a little bit of the weakening with these. This is part of what is dragging on the stock market. How much down it's going to go, we don't know. Take a look at our levels, but just to be cautious on the market this morning. Now, Palantir also accused former senior engineers of stealing some of their proprietary tech, and they launched Percepta AI, so it's competitor. So that's going to be going on for a while. We've got Google's quantum money standing to make blockchain obsolete. Now, this is years down the road. They admitted themselves, even at top speeds, probably not practical. But what they're saying in short is that you're going to just hand over everything to this quantum, is going to do your accounting for you, and you won't have any control whatsoever. So this is kind of what we're heading forward to. So with this has gone on a bit long, but a lot of information with this, because the banks are the systemic risk. We are seeing closures, and I hope this is giving you a little bit more of a baseline understanding of exactly what's going on and why we're looking forward to more closures. So with this, have a wonderful day, and until I see you again, my friends, resist.